Citizens Property Insurance, Florida's insurer of last resort, hit a major milestone this week, 1 million policies. That's more than double what the company had before our state's property insurance crisis started.
We have followed problems in the insurance industry in our ongoing series, The Price of Paradise. A couple of weeks ago, we learned Citizens would provide emergency backup funding for insurance companies whose financial stability ratings were downgraded.
ABC Action News in-depth reporter Stassi Olmos is learning where that funding is coming from and if there's enough to cover a catastrophic storm.
It's a fiscally unstable plan.
Just before August, the Florida Office of Insurance Regulation created a temporary market stabilization arrangement, basically backup funding for companies to stand in place of an A or exceptional financial stability rating by Demotech. But where that funding is coming from has become a big concern, especially since Citizens just hit 1 million policies this week.
It's very worrying.
In this OIR program, Citizens Insurance assumes responsibility to pay for claims if a storm hits and a company goes bankrupt. The Florida Insurance Guarantee Association will pay claims below $500,000, and Citizens will pay anything above. I went to Citizens to ask how they're able to take on such financial risk.
Where is that money coming from?
Okay, that's a good question. The way the arrangement is set up is that Citizens would use its surplus, its $6.7 billion surplus to back up claims that would be maybe affected by an insolvency.
As of August, Citizens has a total of $13.4 billion to cover this program and their 1 million policies. To put that into perspective, if those 1 million customers needed their homes repaired after a storm, Citizens says its risk of loss would be $346 billion. To get a more accurate idea of what a major storm might cost, I looked into the damage cost of Florida's most active hurricane seasons. A large part of the cost are insurance claims. You can see in this chart from the National Centers for Environmental Information, Florida's costliest storm years were close to $50 billion each.
The issue comes in is if we have, a storm season where 1 to 3 storms hit the state of Florida pretty well, and it wipes out all of Citizens' reserves and has to start going through the process of assessments.
That's exactly why Citizens Insurance is referred to as state-backed, because the citizens of the state are, in fact, the financial backup.
In the event that we expend all those funds, then we have the ability to, we're required actually to levy surpluses on our policyholders first, and then levy assessments on other Florida insurance policyholders.
So what exactly does that look like? Well, it starts with Citizens policyholders. Every Citizens customer has signed this document acknowledging if Citizens needs more money to pay claims, customers can be assessed up to 45% of their current premium. If that's not enough, then Citizens can assess all homeowners in the state, starting with 1 to 2% through their insurance carrier. If that's not enough, they can then assess every insurance policy up to 30% for several years. That includes renters and auto insurance.
We've had this in the past. After the very heavy 2004-2005 season, we had an 8-year period where a 1% surcharge was put on insurance bills of consumers in Florida.
So far, only one insurance company has opted into this OIR program, but keep in mind that these surcharges are only what's possible if a big storm or series of storms were to hit. Reporting in Tampa Bay, I'm in-depth reporter Stassi Olmos, ABC Action News.
Thank you, Stassi. More information on past storm costs as well as what homeowners can do if they can't afford any charges on their insurance. It's all on our website, abcactionnews.com/paradise.